Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis. Always the main man of the hour, Mr. J. Brown. Glad to see you weren't affected by the big outage this morning.
Yeah, I heard all about it. In fact, my better half flew to a wedding on the West Coast and she landed at the wee hours of the morning. And she said that the hotel couldn't even, they had to go and manually open up her door for her. They couldn't get her a key.
Yeah, I'm gonna just pull up, but this is that caught my attention. The Sphere.
Oh, they. The Sphere had a what is it when the Windows Sad Mac?
They just call it the blue. So like it's the blue screen is hitting all of these, hardware, software and hardware, mostly on the business side. So that's kind of the news this morning. It really is causing some drama.
Wow, that's really crazy. Yeah, I've heard about it both on a personal level and on looking in the same headlines you are. But you didn't get affected in Los Angeles?
I mean, no,
Not that you know of.
I have a Windows computer, so I think it's CrowdStrike. I don't know how familiar you are with CrowdStrike, but it's kind of a malware software where they're like scanning for viruses, and it sounds like the developers pushed out an update this morning and it didn't go well, and it's having some major effects. But that's the storyline as of today. Markets, I mean, the Dow is reacting because I think some of the airlines might be getting hit and whatnot. But we're still at these all-time highs, AJ, and this is feeling like a bit of a pullback. I think we had a bit of a pullback yesterday. Where are we at? What's driving the market? I mean, it's still
rhetoric.
Middle of the summer, right?
I know it's rhetoric, dude. It is totally rhetoric. That's my interpretation, of course, and that's why people tune in, is to hear what we think. But retail sales, incredibly fantastic. Let me pull those up. Retail sales were incredibly fantastic. And that gave me the feeling, and I'm one of the last people to believe this, Sip, but it gave me the feeling that maybe this whole discussion of a soft landing is possible because people are still buying. And when you factor out, retail sales came in flat. But when you factor out vehicles, right, cars, and you factor out cars and gas, there's an uptick in sales of everything else. And that to me is a positive sign that people are still out there moving the dollar along, right? And so that, and I feel like on Tuesday we reached an all-time high. And so I feel like investors were on my side saying, hey, that's a great thing, because with the inflation reducing but not killing sales, that's a good thing. And in fact, the next day, and this is not as looked at, but the industrial production numbers, so this is where we are as far as making stuff here. Industrial production up higher than expected, and the capacity utilization rate, that basically is how much of a person's time or of a labor unit's time is being used, to manufacture stuff. And 78.8 is high. That's great. That means we're getting a lot out of all of our workers, being very efficient, if you will. So that's all great signs. But I think what's going down is a lot of rhetoric against Taiwan and China, right? And that's one thing that maybe excites, mainstream America, right? It's a lot of rhetoric during this presidential election about how Taiwan and China have taken our business from us and we should tax them or stop trading with them. Wall Street knows that's a bad idea, right? Wall Street knows that our economies are very much intertwined. And, no matter what we're talking about with political stuff, doing business with these big partners is a very good idea, especially Taiwan, right? I think there was some rhetoric around how Taiwan should be paying us, US, for defending them against mainland China. And that's just causing Wall Street to get the jitters. And we're seeing a heck ton of money moving from the high flyers, probably also on sentiment that they've reached highs and that it's unsustainable. But, your NVIDIAs, your Microsofts and Apples, we've seen them selling off, and we've been seeing value stocks and defensive plays get a lot of money in the last 3 days. In fact, we even got a confirmed reversal in our chart. If I put my moving average convergence divergence indicator, the one that people can go and download, if I put that on my chart, you'll see that we got a clear top signal found, right? Got our red arrow. And so that's just telling us that, hey, man, we're on for a much needed amount of distribution after all this accumulation.
And that's probably a healthy sign, right? Like that some of the small caps are starting, the money's flowing out of these big 7 names into some of the smaller names. And I mean, the news today certainly isn't going to help Microsoft. So that's a reason for one of these giant names to pull back. The question that I had was, when we are anticipating what's going to happen the next 6 months or so, we don't mind these slowdowns, right? We don't mind a flat retail sales. We don't mind even a 1/10 or 0.2% pullback, because we need that ammo to lower rates, right? Even if it's quarter or half basis point, like we went over last week.
Yeah. In fact, it's even more solid than last week. Check this out. Investors. So first we'll look at July. Investors, 95%, they've pretty much priced in that there'll be no rate change next week, following week after that. But September, this number has gotten so solid, 91 point. Basically, the market has priced in September, we're getting a 1/4 point rate drop. November 7th, now it's really getting heavier that there'll be a second rate drop on November, and it's not as solid on December. I pretty much we're going to have 2 rate drops, whether there's going to be one in November, one in December, or there looks like, the market is starting to price in that there might be 3 rate drops this year. Remember, back in January, the Fed was telling us there would be 4, and then they went down to 2, and then down to 1, but it might be 3. It might be 2 or 3. I think you can bank on that.
And it wouldn't be bad if it was just 1 or a cut finally, and some rhetoric, because rates have been pretty high, at least in when we look at like the past 5 or 10 years, rates have been pretty darn high, the past 2 years.
It's really interesting. I just read it was actually quite boring, but it was very also interesting. I don't know, boring and interesting at the same time. A long white paper about how interest rates, how they actually work. And the conclusion of this long white paper is nobody knows, right? It's a psychology experiment, right? It doesn't actually, raising or lowering interest rates doesn't actually physically do anything besides make money more or less expensive. But it's how people and the masses and the economy, which is made up of everyone who buys and sells stuff, which we all do on a daily basis, how we interpret the cost of money, right? And so, and this paper was saying that, rate hikes have more effect on the market than rate drops. And it was really an interesting paper. But sometimes when you just sit around like I do and you start to, think on these concepts, you kind of get, it blows your mind. And then you wonder, how does this all work?
Well, we're here to not necessarily know how it works,
but to make it profit for us, right? That was my conclusion after like 2 hours of pondering this crap. I sat back and I'm like, but AJ, all you have to do is recognize the patterns and then pick the right option strategy to apply to it. And so who cares why it happens? Let's just make sure we ride on the coattails of all the investors moving the markets and moving our symbols and profit, richly. That's the destination. The destination is to have that ongoing ATM machine printing money for yourself.
And if you want to pull up the S&P real quick, are we, the soft landing, is that giving you hope that we still have room to run to the upside through the rest of the year?
Well, okay. So, Foss, let me get back to that question in a second. I also remember in the last couple of weeks we've been pulling up and comparing this S&P equal weighting, which while the S&P was going up, the equal weighting was going sideways, and then we got this pop, and now the S&P is dropping faster than the equal weighting. They're both dropping, but the equal weighting is dropping at a slower rate, which is telling us basically that money is flowing out of those biggest of stocks and probably flowing out of some of the 500 and going into those value plays. I mean, just a week ago, 2 weeks ago, we were commenting about how extreme this divergence was and how that really hadn't been something we had seen in a long time, where, the high flyers were that much better than the rest of the S&P. So just want to keep your eyes on that, because we'll be talking about that a little bit later in our segment about why this is like that and all the other clues we get out there. But coming back to your question about the S&P, let's take a look at some of my other drawings. So I like to overlay my retracement analysis, and that's this guy right here. So number one, we dipped out of our channel, which we kind of expect would happen when you get a confirmed top like this, right? Our confirmed top is basically saying, I'm going to zoom in here. Our confirmed top is basically saying that on July 16th, so not that long ago, this was Tuesday, that was our highest close, and now we're going to be searching for our next lowest close, right? We got our highest close on July 16th, and we got that confirmation of it basically yesterday. You can see that red arrow. And so now we're heading back down. This is where we then bring up my next drawing, and I'm going to have to update this on the fly here, because what we want to know is where should it go down, because that's going to make a big difference if you buy into my retracement analysis, which a lot of people do. So where we retrace to, let's see if I can adjust this on the fly here. So we said July 16th. So I'm going to go ahead and see if I can click over on some of this stuff, some of my drawings here. Maybe not. Let me just draw a new drawing, and that'll be where we do it for now. And then I'll update my charts before the next show. But basically, we want to draw a drawing here. And what this is telling us, and I know that I've created a lot of confusion here with my drawing, but here's the new level. If we pull back, and we're already almost there, if we pull back to 5,500, anywhere between 5,400 and 5,500, that means that we have a lot of room to continue up. That's going to be a swing trader's heaven, right? And it looks like we're pretty close there. If I pull over here to my chart, you guys just stick with me for a second. Let me go ahead and get rid of my percentage moves here. Boom. All right. We're currently at 5,525. If we get 25 points lower on the S&P 500, then we'll be in that zone. Swing traders are going to get all, ready to be able to take advantage of the next swing up. But now, if we dip down even lower, if we dip down below 5,400, anywhere from 5,100 and let's say 30, maybe 35, 5,135 up to 5,400, that's going to be like heaven for us premium trade sellers. That's basically saying that the market is going to stall for the net foreseeable future. So I'm watching that 5,400 really closely, because where we reverse next, whether it's above or below 5,400, will tell me whether or not I need to be prepared for some swing trading up, or whether some sideways premium selling is going to be for the rest of 2024.
And I feel like this week we might have had a close call with some major turmoil here in the States with the attempted assassination. And I saw a couple of assassination of Donald Trump, and I saw a couple of videos that was like, oh, everyone, everything's super calm and like, things are operating as normal. But it could have very well been the complete opposite, where Monday, Tuesday, Wednesday, Thursday, who would have known what was going on in the country, and that kind of turmoil may have brought the market down. I mean, that is something of historical value, and it probably would unsettle investors knowing that can just happen to our Republican presidential former president, right?
Yeah, absolutely. And let me go ahead and show you one more thing, because you said a key word. You said turmoil, which is very similar to uncertainty, confusion. Those are all synonyms, right? Here's our VIX. Now, I don't know how many of our viewers, if any of our viewers want to comment right now on this, but we got a signal on July 8th that we should be looking for placing our VIX trade. That was at the end of day on July 8th. And then it looks like we got a little bit of that follow through either on July 10th or as early as Monday that said, please place the VIX trade. I'm curious if anybody took advantage of those signals on either of those days, either last week or this Monday, and put that VIX trade on, because if so, you are spot on right now, because the VIX is known for reacting to that turmoil, reacting to that confusion and that uncertainty. And look at what's happened. I mean, if you placed that VIX trade for about 2 weeks out from now, or even if you went all the way out to the August expiration because you were looking for liquidity, you're in a really good place right now. And so I'm just curious if anybody took advantage of those signals, used my free indicators, took advantage of those signals, and got into that VIX trade. I'd love to hear from the audience.
And it's crazy because 2 or 3 days later, President Biden has COVID, and it seems like he might be, on the verge of going pretty bad too. So turmoil is definitely out here, and the summer doldrums, at least this week, not very doldrum, not very calm. We've got some action, and we're gonna try and set up some more opportunities to make some money, to profit. I know that this VIX trade was a killer trade, 2 or 3 months ago, and it seems as if the setup is right there, which is one of the wonderful reasons why you should head on over and download AJ's free indicator. We've gone ahead and thrown the link to that in the chat. Head on over there, download it, plug it into your system, and you'll get some of these awesome triggers like the team at Trading Trainer is identifying on a day-to-day basis. In addition, we've got the link to AJ's free daily workshop in the chat as well. If you're interested in learning more about how to take what we're discussing and some of the ideas that AJ is presenting, if you want to learn a little bit more about the details of that, this is an awesome workshop. He breaks down 4 of these strategies. Sign up, watch it later. Sign up, watch it now. This is running daily, so head on over there. The link is in the chat. I know that we've got a pretty interesting trending topic that we'll discuss. And just so you know, I did get the software up here running, AJ.
Nice.
Then we've got AJ's pick of the week and our speed round. So sit tight. We're going to take a break. We'll be right back. If you have any questions, comments, concerns, the chat is live. If you have a name you want AJ to run through, the chat is live. We'll be back in a jiffy.
You're afraid of trading in the markets.
Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, heading into our trending topic. And when I first saw the keyword here, I thought we were going to be talking about the movie, but we're not. The keyword, the trending topic for today is Avatar, and why exactly is that, AJ?
Well, what I've been, and I gave a 5-minute. I'm not going to do it this time, but to my program participants, one of the most important things you can do is really wrap your head around who is actually investing in the underlying symbol that you're looking at, whether it be an index, whether it be an exchange traded fund, or whether it be a stock. You will really want to understand who's driving price up, down, or sideways, right? And who is perhaps trading different kinds of derivatives against those symbols. So I always ask my folks to do what I call just a fast and quick and dirty soft data analysis, right? What we like to look at is things like, news headlines. Just read the headline. Don't worry about reading the news articles, but look at them chronologically. You'll start to get an understanding of who these headlines are targeted to, and what type of activities this company is doing, and you can correlate that with the price action and start to get an idea in your head of what this person looks like. You can start to create an image around the demographics. Is this a young person? Is this an older person? Is this a person who wants to grow their wealth? Is this a person who wants to basically keep their wealth working for them? Are they interested in dividends that a company offers? Are they interested in companies that may be something big in the future but are just an idea right now? Or are they interested in companies that are steady, have been around for a while, make money, so on and so forth? You could even go as far as, would this be interesting to ladies? Would this be interested to men? Would this be interested into tech savvy people? Would this be interested into moviegoers? You get this idea of who it is, and that helps you start to understand when you see different evidence in the different soft data or the hard data, the price action and the implied volatilities, what might be happening. And so we were talking about that with some of the like, for instance, even the S&P 500. We know that the S&P 500 has not been distributing as much as it has been accumulating. Now, usually that means there's new money being introduced into the equation rather than the regular players. So what is the avatar that looks like that new money? Well, another piece of evidence we have is that divergence between the S&P 500 and the S&P 500 equal weighting, telling us that it's these 3 companies, Microsoft, Apple, NVIDIA, that are, really that are in the headlines. And in addition, they're new technology, and they're getting people who are really, really interested because of what the mainstream media is putting out there. So you're getting people who otherwise wouldn't be invested in the market in there. Then you take a look, and there was a huge dip in the crypto, and you kind of, if you're like me, you already had an avatar. These were like younger folks that kind of were getting excited about all the celebrities and all the sports figures, getting interested in the crypto thing. And so you start to type in these characteristics, younger, kind of good job out of college, having some wealth, whether it be mommy and daddy's wealth or your first job wealth, that because you're living with a group of guys, and or you're living with people, you don't have high expenses, you're not married yet, you don't have kids. And so you start to type these things, and you get an image in your head. But as Sip is pointing out on the screen, there's these new AI tools where you can just start typing in these characteristics and it brings it to life. Look at that picture that SIP has up. This is the artificial intelligence that you just start describing these random characteristics to it, and it'll actually bring to life this image. And I actually asked my program participants for every underlying symbol you're following, whether it be an index, ETF, or stock, create a dossier and I said you can do it electronically in folders on your computer, or you can be like an old fart like me and have actual manila folders on your desk with each ticker symbol on it, and put in there the picture of the avatar, the person that might be interested, that might be controlling the stock price, right? And so I think it's very valuable, these image generation tools, because they help take it out of your brain and actually solidify it. You can come back, open up your dossier, look at that picture and be like, that's the person who's moving the stock price that I need to get in their head, and I need to be able to understand and rationalize with them so I can follow them, because if they're moving the underlying stock, I'll be able to ride on their coattails, right?
Yeah, when you were mentioning crypto, so I was like, oh, I wonder what a crypto trader looks like. So I put in millennial day trader male with long hair who likes to trade crypto at home. I don't know. I'm sure this could evolve, but
Yeah.
it's not a bad start.
No, I think all 4 of those pictures, and is that lower right-hand one, that looks like a lady, right?
Yeah, the AI is still learning, I guess. Unless
Yeah, but
unless we're showing
still,
pronouns here, right?
yeah, but yeah. But still, that is exactly what you need. And then you get over to a stock like what's another one that we always like to go on? Something like a GE or something. And GE is a company that's been around forever. Every time they report earnings, in fact, GE would be a good stock to talk about with respect to the earnings strategies that we use. But they always give good earnings. They give a good dividend. The person who invests in this is probably like an older person who is really happy every quarter to get that dividend check. They've made their money. It's probably like a boomer.
Is this your guy right here?
There you go. There you go. A boomer who's already, either at retirement or thinking about retirement, and they're putting their money into one of these companies that, it's safe there, because we know that company is going to last at least another 100 years. We know that they're going to keep getting payback every quarter. Who cares if the stock goes up in price? We just want to keep getting our dividend of 28 cents per share, and so there it is. I gave a couple of characteristics, and now you have an image of the guy who's moving or not moving GE stock, right?
Yeah.
Powerful tool.
Yeah, I think the angle I was taking here is he doesn't like computers, so he's still checking the prices on
the newspaper. That's exactly right. That's exactly right.
Cool. Wonderful take on avatars. The tool I was using is Adobe Firefly. I'm sure there's a handful out there. ChatGPT, I think, has a variation of it. Midjourney. Just something cool, I think, to just help you puzzle the equation together with a visual, to maybe remove a little bit of the tension that you might have with putting a trade on or making an investment, right? Like,
yeah,
adding some reality to it with
having that image of who am I trying to get in. You want to get into these people's shoes so that you can follow them, right? If you go into the markets thinking that, hey, my vision of how the world works is going to help guide me in the markets, you're going to be soon parted with your money. The way to recognize these patterns and understand these patterns and be able to trade these patterns is to be able to put your shoes into the investors that move that pattern. And those images that SIP were creating is just like a sample investor. And they get together and it's all kind of the same person. It's just that's that generic image. You know what I mean?
For sure. All right. So with the avatar concept in place, our review of the week. Your pick of the week this week is a name that we actually had somebody call out last week, and so
Yeah.
I'm interested if there's any extension from that suggestion. But
Yep.
let's get into the juiciest part of the show, and that's AJ's pick of the week. Today, that is Samsara, ticker symbol IOT. You must have really liked this one from last week.
So last week that was brought up to us. This was a new name to me. It still is a new name to me. And so I gave my 2 cents on it just seeing it for the first time last week. But then I took a week and really took a close look at it. And, one thing that I worry about a little bit with Samsara is there's a question around liquidity, right? And you can see the liquidity of a particular symbol in its bid-ask spread. But what's nice is we're actually looking at, usually I look at symbols end of day. You guys know that, right? I wait until my little toddler is in bed, and then I do all my work maybe 10 p.m. Eastern time. And I look at all the symbols that are on my watch list or hot list. And then I look at the symbols I have positions on, and I look at ones that I'm looking to carry over. And so during the live market, you actually can get a better idea of liquidity. And I'm seeing better bid-ask spreads in the live market on Samsara than I did at the end of day yesterday and previous days. So I'm actually a little bit relieved. I'm looking at the October option. This is the option that I would use for my protective trades on my premium selling. I don't need to look if I've got liquidity on the protective options, then I probably am okay. Not probably. It's a given that I'm okay on the options that I would be selling for premium. One can't happen without the other. So if I've got, 3 to 6 months out options and there's liquidity on it, then I'm good to go. So with that said, we look to be forming a top. There was one other thing that I had some reservations about. If you take a look at our options again, they're trading the very traditional $5 increment. 30, 35, 40, 45, right? So you can't get very granular with your option trading strategies. But now I see that here's 40 and here's 30. And I am totally happy, right? These income generating option strategies fall into a more generic category called range bound option trading strategies. If the symbol stays within a certain range between those strike prices, you'll make your not even quarterly, monthly, or even weekly income. So because we've reversed, you can see a couple of different of my indicators. I've got all 3 on. This is the shaken indicator. This is the MACD indicator. And this is the moving average crossing indicator. They're all kind of giving me signals now saying that a top has been found, and we're looking for follow through. If you didn't get the follow through on Thursday, we could still look for follow through, coming up today or Monday. But you get follow through, and this is where you would set up a initial covering position. And whenever you're at the top of a channel, your initial covering position is going to be to either short the stock or buy a back month, deep in the money, far out in time put option. And the one that I picked out was the IOT January 17th, 2025, $55 put. And I fully know that usually I say go at least 8 months out. But this particular stock, the next option available after the January 2025 is the January 2026. And that is so far out that the prices have gotten a little bit higher. And I'm just compromising here. I'm making a conscious decision and saying I'm going to go with the January 2025, knowing that I may have to cut this trade off maybe in November or December at the latest. But still, that gives me, from now until November, December to make a few months of premium. So yeah, either I'm going to short some IoT, or I'm going to buy that IoT January 2025 $55 put. And then both of those trades, whether I short the stock or buy the put, will increase in value as it comes back down. And then once it bottoms, that's when I start my process of creating income trades. I sell a, near term at the money put. I buy a 3 to 6 month out. That's why we were looking at the October options. I buy an October call and I go to town. I start rotating those trades, making a once a month adjustment on those trades, maybe twice a month adjustment on those trades. And this really plays out when I did my simulations for some nice income gains. So I wanted to feature it for everybody.
Awesome. And I always love when our viewers bring us things to look at, or bring names
And they
to
turn
our
out to be
attention.
really good stocks after I do my deep dive on them.
Yeah, and we add it to the watch list. So let me see, who was that again from last week? That was
Kui
Kui.
from Mexico.
That's right. That's right. Awesome. So AJ's pick of the week, Samsara, ticker symbol IOT. Let's go ahead and run through a couple of other names in our speed round. This first one comes from John in Ohio. Ohio's in a big name these days in the presidential election. I'll be getting a lot of action out there. He's interested in your take on Wayfair, ticker symbol W, the furniture manufacturer, e-commerce.
Right. Wayfair is Kelly Clarkson. Okay, I'm just thinking about the commercials I saw. We looked at Wayfair before. I can tell because I've got my annotations on the chart. But you know what? Wayfair is coming up on some earnings, and maybe we want to think about Wayfair as a earnings play. I'm going to preface that with a little bit of caution, because the earnings play I'm about to talk about really is based on the idea that there's an anticipation ahead of the trade. And so that causes people, we were talking about kind of some frustration, some confusion, some uncertainty. That causes derivatives to go up in price. And so what I would almost do here is and it's usually the near term at the money derivative that goes up in price, because people hedge with the cheapest thing possible. And since they only want to hedge for a day or two ahead of earnings, because the hedge protects them if earnings sends the price one way or another. So people are going to jump in maybe a week before this earnings. This earning is scheduled before market open on August 1st. So maybe July 31st, July 30th, July 29th, you'll see that the price of derivatives, especially the near term at the money one, is very high, right? So what we want to do is a calendar spread. How this works is you use an option that is a back month option, right? And this option will probably not move in price because people aren't going to be using it to hedge with the uncertainty. So you buy a back month option. Usually we go about 6 months out. Let me go ahead and draw this. So you pay a certain amount of money, and then you immediately sell that very expensive near-term option. And it'll be the same strike price. That's why we call it a calendar or a horizontal spread. So when you buy the back month option and sell the expensive front month option, you wind up out a net amount of money for this calendar spread, right? And I would pick a strike price pretty close, probably to the $50 mark. So you're only paying this. Now, what happens is as soon as earnings is released on August 1st, whatever happens, happens, but people start saying, okay, now that earnings has been released, I don't need those options anymore. And they start selling them back, which causes that price to drop. So now when you go to sell your calendar spread, the back month option stays relatively the same price, but the front month option is now much less. And so what you paid for at that small amount, that yellow amount, is now this amount. And so when you sell it, you can actually sell it for this higher value. And so that's kind of the mechanics behind this trade, is that we go ahead and take advantage of that front month option becoming overpriced when we go ahead and buy the calendar spread, which means we're buying the back month and then immediately selling or simultaneously selling the front month. And then when we go to sell this same strategy, that front month has lost all of its value because people don't hedge anymore. They're getting rid of their hedging, causing that price to drop. And so when you sell it, you actually make a profit. It's kind of an ingenious way to play earnings.
And that's the topic of the next couple of weeks, which is why we got our little earnings background here with some of the names. I know banking has been hot,
Yeah.
but it does look like there's some nice support there. So I'd be curious to see if that could hold up over time.
Yep.
But that's Wayfair, ticker symbol W. Let's move into our second name. This is Jennifer from Arizona, interested in a REIT, ticker symbol, or the name is Starwood Property REIT, ticker symbol STWD. Boy, does that sound boring.
Yeah, I think isn't Starwood. We looked at this before. I can tell this is a company that like buys properties that hotels are going to be built on, like the new Holiday Inn Expresses and Hilton Garden Inns, the small hotels. And then once the building is bought, those companies come in and buy. I'm not bought, but the building is made. The companies go and buy it from this REIT. So this REIT is kind of the holding company that goes out and finds these locations, builds the initial hotel, and then a Holiday Inn and Hilton will come in and run it, right? And whether Starwood sells it to them or leases it to them, this is a neat business. And what I like about it is, we featured this. I can tell I've got my annotations on it. And if we looked in our notes, we could probably find when either somebody or me recommended it. If you got your initial covering position in where I think we told you to, this is going to be a fantastic place. Now, I'm going to tell you, wait until you actually get that confirmed top signal. So let's not jump the gun, but let's wait for that actual signal. But if you go ahead now and sell your near-term at-the-money call option, and at the same time buy a 3 to 6 month out protective option down here at, let's see what the strike prices are. If I come to analyze and I look at here, I would go probably, I like the December option for my protective option. They're going every dollar, so that's great. That gives us a lot of play. Wherever you want to protect it. If you can afford it, protect it at the $19 mark. If you need to go more budget with your protection, buy your $18 protective put, whichever one. December is the strike price. So again, two simultaneous trades. One is your near term, probably at this point, since today is option expiration in July, you're probably talking about your August option. And that would be an at the money option. So wherever you reverse, if it's the 20 or the 21, I think those would both work for you. And then at the same time, you're going to go ahead and buy that December 18 or 19 put option. And then you just let it go. You let time work for you, and this trade just pays you back. So I think the reason why you sent it our way is because you're getting that top signal. If you guys missed that bottom signal, you could also put your initial covering position on here. This is just like the one that I featured, IoT. You'd be shorting the stock or you'd be buying a deep in the money, far out in time put option. So you're either buying put options, you're buying put options and you're selling call options at this point, whether, where you are in that process, whether you're buying it to initially start the position or whether you're doing it because you're doing your first premium sell. When you're at a top, you buy your put options and you sell your call options.
And once again, you probably would want to wait till that indicator gives you the
Yeah.
little red arrow. And
Yeah.
if you want to grab access to the indicator, we've got the link to that in the scroll bar there in the chat. Always makes life a little bit easier when you get that confirmation. So
Yep.
Starwood Property REIT, ticker symbol STWD. All right, moving on to our third and final name in the speed round. I'm actually interested in what's going on here. This is Bob out of New York, wants to know about American Airlines, ticker symbol AA. All the flights are being diverted, canceled. We're getting a big shutdown all across the country today.
Mm-hmm. I'm not so worried about that, although that could affect us. I'm more interested in this earnings number here. Guess what? It's earnings season. Calendar spread. That's my default. Calendar spread. So, in fact, today or Monday, we're going to have earnings on July 25th. So, next week, early on. So, today or Monday, you do your calendar spread. What would we do? Let's see. We're currently trading at $10.59. So I would probably, you could even do weeklies, but I'm looking at the August. You could probably do, depending on where you are, either the 10 or the 11. And I would either do this for August and December. So the calendar spread is buy, and it doesn't matter whether it's a call or a put, by the way. You're going to, buy the 10 or 11 call or put, and then you're going to go ahead and sell the August 10 or 11 call or put. Make sure it's the same strike price. Make sure it's the same type. If you're going calls, go all calls. In fact, if you tell them you're going to do a horizontal spread, right, that's called a calendar spread. You can see right here, they've got the different, combinations, and you can even go in there and custom pick. And so I'm saying do a December and do an August. So change this so that it's not August, it's not one after each other, but do the August and the December and make it into a calendar spread.
I did find a nice little GIF of the diversion. So if you take a look at, these are all the planes that were in the air, and then the software malfunction happened, and there's got to be at least a couple hundred planes that are down, and it has nothing to do with weather. Just imagine once the hurricanes and stuff start kicking in. So I can imagine that has an effect on earnings. Maybe not what's happening tomorrow, right? But
right.
The rest of the year, I don't know. It seems like
I
airlines
constructed a calendar spread. I constructed the December, August. This is going to cost you 70 cents, right? So it just went up to 71 cents. So it's going to cost you 70 cents, and then you sell it the day after earnings is released, and it'll probably be worth $1 or so. We'll come back and check on this one. But if you were to buy this right now, it would cost you 70 cents per option share, or $70 per contract.
And that's to when our earnings? You said next week?
Yeah, the 25th. When's the 25th?
So next Thursday. Yeah, next Thursday.
Yeah, you could probably wait until Monday. Again, some people are probably asking, well, you said you could use the 10 or the 11. Seeing as how there's a little bit of a downtrend and we know what's happening, I would probably err on the 10 side. But you could even wait till Monday, and who knows? Maybe by Monday, you're going to err on the 9 side. But that's how you construct it, right? You come on over here and you're going to pick the near term. You could even use, I see that we've got some weeklies. So if you didn't want to use August 16th, you could use August 9 or August 2nd. That raise the price a little bit, but this will be even more reactive. So August, I would use either the monthly or the weekly, somewhere between 2 and 4 weeks out, and then use your December and make it into a debit horizontal or debit calendar spread. And that's how you would probably trade that one.
Awesome. American Airlines, interesting topic. Airlines, a lot going on from a variety of angles. And with that, AJ, heading into earnings. We've got some big ones next week. I believe Google, I believe Tesla. So the big major movers are going to be letting the market know how they're doing financially, and wouldn't be surprised if it has some impact on the overall market. But what are you keeping an eye on? What are you going to be looking at next week?
Well, gosh, it's funny. We brought up as an example for our avatar discussion. We brought up the example of using GE, right? And then I looked at it just really quick. And this is so funny because it's literally on the fly here. But let's see, November, I'd use the November, and I'd use the August, and I'd use the 160. So what we've got here when we take a look at our profile is a debit spread that currently is going to cost you $3.85 per share. But yeah, I think I would do that. GE is giving, it's even better than those twos we just looked at. It's even better than Wayfair and American Airlines. GE is, the earnings play, and it's going to report earnings on Tuesday before the market opens. So you want to get this trade on probably Monday. And if you don't, you just want to see how this works, put on a paper trade, put on a simulator trade, see what happens. But that's kind of the earnings play that I would play. I would play the 160 strike price. My back month option would be in November. My front month option would be the August 16th. And yeah, I would create the calendar spread on GE. So I'm going to be looking for these different earnings plays. But you see how GE is just kind of consolidating, moving sideways ahead of that earnings. I think that's going to be a good play for us to do the calendar spread on.
Yeah, I imagine once you go down one of these, or once you get into the community meetings that you have every Thursday with the team, that you're just getting good names left and right, and you're digging into them, and you're seeing which opportunities are going to be best. And that's kind of the storyline. The storyline this week is these calendar spreads and these earnings plays.
And that avatar that you pulled up on GE, that old guy,
right.
the old geese.
And we do have a couple videos on the YouTube of the calendar spreads. So if that's something that you want a little bit more background on, head on over there and check those out.
Check out our archives.
If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. Things are going to start to pick up as more and more election news comes out. We get through earnings. We got some Fed stuff coming up. So, August, September is shaping up to be a very exciting time. And you want to be in tune so that you can make as much money as you can, or protect the hard-earned money that you have. And AJ and the team at Trading Trainer have those strategies to help you. So once again, the link to the webinar, the daily workshop, is in the chat. The link to AJ's indicators is also in the chat. AJ, any final words?
No. Earnings season, we're upon us. Summer doldrums, you're right. September and this fall season's probably going to be quite volatile. This trading thing, this investing, this active investing thing that we do, it's not something that you can just pay me money and you automatically just start doing. It's a skill. And so Ciprian's 100% right. If you want to be primed for this fall, get in now. Start your skill acquisition process right now. And we look forward to working with you.
All right, guys. Thank you for joining. AJ, thank you for your time.
Absolutely.
We'll catch everyone next week. Be safe.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that